Good morning. Good morning. All right. Market's up, recovering a little bit from I'll call it the dip from hell. That was something after the prior 2 days. Wow. Wouldn't have thought it'd get all the way back down to that low. And markets are different lately, last year or so. So we've got just looking at the futures here, the S&Ps, and you see that big red bar. And on the way down, it made a stall at some prior support, and then it just kept going before it got down to that bottom area there and had that bounce. And just chopping sideways here and up a little bit on, I think it was personal income, some news, I guess, that people making more money, I guess cashing government checks, and more government checks believed to follow. And I guess most people work for the government eventually at some point. What's going to happen when they turn off that? But we shall see. So back to the factory work. The blue line here is in alignment with this resistance area. It's about halfway up the bar, if it can get there. There is resistance right there. Of course, you can see it just by looking to the left. Pretty simple. And so if it can get through here, right, you got to figure this market is a schizo, call it whatever. Could it get back to the top of that giant red bar today? How many people would want to bet it makes it up there? Would think that's possible. Could it get back up to the top of that wide range red bar? No one, no takers. Across this 3880. What do I have written down? All right. So here's the resistance. Across this 3880. If it gets through 3880, there's nothing to the left. Might depend on how it gets there if it does. A straight up shot, it would probably stall there. Greater than 100% retracement. I'll answer Jose in a little bit. So we've got a little bottoming action going on here. And right on the 50 MA, odds are I think it stays down below this area. And so let's go to SPX. So based on yesterday's sharp drop, there's some pretty healthy premiums down here. And what I did was just to kind of, how crazy can this market get on the downside? Right? If we open to anything's being possible. So I measured this bar, and what you can see here, it's about 111 points. So I just made a bar and measured this thing, and I just extended it to the downside and put it down here at around 3,700. So, market's up a little bit right now. So to get all the way down there probably is not going to happen today. I wouldn't think so unless, I don't know, Kamala takes over. I don't know what could spark the market down there. Anyway, point being, you got lots of juice and lots of open interest on the way down. And so this green line right here is at 3750. And that's got a pretty big open interest there. Actually, almost 11,000 contracts. So just kind of splitting this in half and doing a put spread. Things are up here a little bit. I didn't look at where the premiums are right now, but just going a little below that, 3740. 3740. 40. You still got decent juice there. You could even go down to 37.20 or a little lower, but it's like they're elevated so much because of the drop, because I guess that's just what happens. But anyway, I think 37.40 is far enough away for today, even considering this up open, where you could sell a put spread. And on the upside, there's the relatively big number there is 3,900. Say, should be pretty rough area to get through. So you could consider 39.10 up there to get above that 39.20-ish. It kind of gets to the point where maybe it's just not worth it. But if the market rallies enough in the first 30 minutes, you could certainly consider it, right, to go a little higher. And those juices would increase. So there's your SPX. I don't know if anybody's tracking these numbers I give you, but if you follow the extremes, I'd be interested to know, because I think these extremes pretty much have been probably in the area of better than 90% of being profitable calls. On pretty simple stuff, open interest, and just looking at where support and resistance is. Yeah. McGraw takes screenshots. If he writes down the numbers, good, somebody's tracking. All right, so where are the other markets? And so the Qs, all the way back down. It was wild. It was incredible yesterday, right? So I picked off a few places on the way down and took some pretty good heat, right around here. And it went down. I think it was around here. Was it here? No, it was here, right? Where I got long and then got long here. I shorted Dow on the way down, hedging my long on the S&P. And I turned it into a profitable trade at the end of the day. But you know what? I miscalculated a bit. And anyway, it took some a little bit more aggressive trading and things that I typically don't do to get that trade to be profitable. And say, well, why didn't you just short it on the way down? Well, when it first went down and we got tick extremes, I thought it would bounce, and it did. It did start to, bounce. You see even over here, that was a pretty decent bounce right at the open, and this was a pretty decent bounce for day trades. But anyway, sometimes things don't go as to what the norm is. And, that is not normal, right? That is not a normal day. So now it's on this big support area. It's bouncing up here a little bit. We've got this, let's call it a minor resistance area. And just stick it in different spots there. And it's right around 13,000. As it comes up to, we'll see how it deals with it. All right. What should we look at on the Qs to see a realistic bounce back day from yesterday? Well, factory work halfway up. Where is it? 316-ish, 316. So far, that's a realistic bounce back. And the further it gets, Jose, past like this area, it's gaining some strength and showing that buyers are willing to be more aggressive in the face of, such a down bar. And a down bar in of itself is not a big problem as far as being very, very bearish. But when it comes after a giant bottoming tail bar and a day that follows through over, I mean, I mentioned in the green room yesterday that, look, just historically, and I don't pretend to have a crystal ball to tell the future. I just look at patterns, and the historical norm would have been a gap up and an attempt to go higher, or maybe a continuation up to the 20 MA, which would have been the top of this bar, and roll back over again. But this thing gapped down. And when it hit the high, I mean, it was just hit the bid, get the hell out. Yesterday and the day before was a big mistake, and we talked about it. It was like, well, what the hell was the news? And there was no news. Well, the news was, hey, interest rates are going up. And it was like, hello, right? As Dan say, McFly, which means like, hey, you moron. You didn't notice they've been going up for the last month and a half, 2 months? This day got your attention. And while, in our advisory letter, I've been telling people sooner or later it's going to get their attention. You didn't know when it's going to get their attention, but this thing's going up. And so yesterday it got their attention. And it was like, okay, the last 2 days, we have to sell. We have to sell. And so they did. So where does it go from here? Well, interest rates are down a bit. News of personal income being up, government checks. We'll see where it goes, how much of recovery there is today. Yes, Deb. Debbie saying thank you for stopping from buying TBT. Well, Deb, if you get the ETF letter, and if you were watching Telegram right before the open, when this was up here or right after the open, I typed to Dan, sell it all. Sell it all. And while I think it'll eventually go higher, I think there'll be a place to buy it back. So all right. YM. Now that's the biggest wow from yesterday, I think. Well, they all went down. The Dow had this monster breakout, after the bottoming tail bar, and it gave it all back plus some. And Eric's saying, how will the government give away free money if it actually starts to cost something for them to do so? They just print it, Eric. They just print it. That's why Bitcoin's going up. I don't know why gold's not going up. I guess that people find Bitcoin more attractive, but silver gave it back yesterday, which was interesting. We'll take a look at. But government printing money like that, okay, inflation going to come. The value of the dollar been going down. It's kind of like been stabilizing down here for a little bit. You can see. So that's kind of interesting, what's happening. But this government's out of control. Most of you know the history of superpowers. They eventually become underpowers. And with the people we got in that White House now, you better stock up on canned goods, toilet paper, and whatever. There's those morons. All right. So big down day, breakout failure, 180 reversal, right? And we'll see if it holds this support here, whether it can continue to go sideways. But, over the last week or so, I said, just look at this on a closing basis. It's just running in place, even with the tails. But that wasn't running in place, and neither was coming down. And breaking below this opens up the door to the void below. And, can it come all the way back down here? Sure. We'll just see. But we got a topping tail there on the weekly. Of course, we'll see what today ends. The NQs, we got, more of a, more potent type of reversal. And potent reversals are about retracements. So bullish move up, bearish move down. Hey, it's all about retracements. It's not about dark cloud covers and morning stars and evening stars and all that hocus pocus. Right? It's about understanding retracements. It went up, it came all the way back down. If there was a day in between here, it would have a doji bar, it would have some candlestick name. If it was a topping tail, it would have some candlestick name. If it gapped up and gapped down, it would have some candlestick name. In reality, all we care about is it went up and it came all the way back down. Call it bearish. Right? All the way up, all the way back down, and plus some. Within a trading range, so far it's holding the support, but so is everything else as it's bouncing around here a little bit. We'll see where this goes. We've got some resistance up here, some real thick resistance up here, but it shouldn't get up there. It should not get up there because this is bearish. And normal historical patterns stay in the lower half, more bearish in the lower third, and they eventually jiggle around and they go down. I don't think that's going to happen today. Why? Because there's such a big day yesterday, typically followed by consolidation days. Well, that was a big day. It wasn't followed by a consolidation day. It was about hit the bid, moron. It wasn't about buying the dip. You're welcome, Scott. Scott on YouTube says he loves the honesty. I do too. You know what? I never like to be politically correct. You know, if I say something inappropriate, just tell me. If I say something that is true, but it hurts your feelings and you yell at me, I'll just tell you, too bad. Turn the channel off. Okay. So now might be the time to consider putting your toe in the water to buy TLT or maybe short TBT or buy some bonds. Short-term trading. We talked for months about bonds coming down here, and now they're here. And you see the wide range bar, which is climactic. Right? TLT calls, sure, McGraw, yeah. So what we have here is prices moving down and down and down, and then a range expansion bar into an area of major support. Historically, that marks a short-term bottom. How far will it go up? I have no idea. But hey, government to the rescue, right? Got to save the stock market. Let's see if we can get bonds to go up a little bit and bring those interest rates down. And where's my TBT? Right. That's a pattern. That's climactic sell setup. So interest rates probably come down a little bit. Markets jiggle around, wait for the smoke to clear. And eventually, markets will, stabilize and they'll be okay. So oil is up near some significant resistance here. You can see it just by looking to the left, kind of threw it a little bit here, but I think oil is getting relatively close to the end of its move. Even if it gets a bit higher, this is still with oil at these levels, the oil related stocks and ETFs are going to do well. I think they'll continue to do well this year with oil, even if it does start to pull back a bit. And where are we at here? Gold is down. It's not turning around. It's still just sitting here. We'll see if it makes a W bottom, but not much interested in gold. Interest there. And silver, kind of a disappointment. Big bottoming tail bar and a breakout, and here this second bar. Now, looking at patterns the way we do and understanding historically what patterns do, this one was supposed to go up and it didn't. That's why we have stop losses. If they all worked, we wouldn't need a stop loss, right? But this was not supposed to go back down below here, and it did. So now it's uncertain whether this holds, maybe this turns into a shakeout. And if it does, and we get a green bar back up here next week, buy silver, buy silver stocks, buy silver leveraged ETFs. Right now, stand aside and we'll see what happens. And what's the relationship between Bitcoin and gold correlation at all? Right now, it has no correlation. It's got an inverse correlation to some effect, John. I've heard comments that Bitcoin now is the new inflation hedge, and that's why gold is underperforming. Maybe that's true. Things change. Right. So I don't know. Bitcoin is coming in. It's correcting a bit. It's come to, and we analyze whatever it is that we're looking at in exactly the same way. Bitcoin came down kind of hard. It tried to go up and formed a topping tail. It's at its 20 MA. 20 MA is in alignment with this price support. So it's in an area where buyers will begin to step up. And if they fail to do so, and I suspect maybe that might fail to do so because of this weekly chart, and it would still be okay if it was to pull back toward 40,000. Let's consider possibly, we talked about measured moves yesterday, pulled back here to 38, 40,000. It's probably a good buy. Well, there you go. And lastly, because it's getting late here, sentiment stinks, Jake. Still bearish, right? This was a confirmation of yesterday's selling. Short term, you typically get some stabilization, but that is confirmation of that red bar for breadth to be down there. Now, put buying versus call buying picked up a bit, but it's still historically bearish, right? We need to see this thing spike, right? We need to see it spike up to the green lines. I know none of you have probably seen these green lines in a long time because it doesn't go there. But when it does go there, right, and this thing comes down here and breadth is down here, I'm going to say, let's look for a bullish reversal bar to buy, right? So breadth is at a bullish extreme. Sentiment is not. They need to match. You could get some bounce here. So all yours, Dan.
All right, good morning. Yeah, so nice recovery here pre-market. So as long as we hold in the first 30 minutes, I'm day trade more bullish oriented. We're low on time, so let's just go right to some of my favorites here. I'm posting in the weekly options trader. I like Netflix. We can do a 0 right here. Now, there was a ton of damage yesterday, so I kind of feel like we're just day trading, picking the best of the damaged merchandise. But this one actually is not that damaged. Beautiful, beautiful gap reversal here. It held, if you look at the weeks range, which the weeks range here is obviously Wednesday and Thursday. Yesterday held the upper 50%, and now it's gapping up. So I'm looking at the 535, 515 put spread on Netflix. It closed at 149. Obviously, it's not going to be anywhere near that, but that's a favorite trade of mine right now. Rocket was a nice gap for put spread. It's too messy for directional, but see now, I saw it when it opened up here at 22 bucks. See, so I saw it when it was here, and now it kept going. So maybe I think we aren't going to get the juice we want. Etsy had a nice gap, over yesterday's high. So this one I might even consider a put spread for next week. GME or Beyond. Put spread idea also gapping over this red bar. This one looks fantastic. That's a favorite of mine. If we can do a 0 DTE McGraw, that looks great. Remember we had a long discussion on GME yesterday, and I sent out a little note to the weekly options trader. We could have sold the $800 calls for 3.25. Asinine price for one data expiration. Just, I've never seen anything that high in my life. And we were talking about, yes, it's risky. Yes, it's a GameStop ploy. Yes, yes, yes. But talking realities, come on, what's the odds of that? Costs, yeah, 30-minute low. Yeah, 30-minute low on costs. That's our thing. You're mentioning Apple. Yeah, Apple's, now see how this one is significantly weaker um, than Netflix. So that would just be a day trade only because it's still just gapping into that nasty bar, and that's a downtrend. So I much prefer Netflix put spread. Amazon, same reasoning. This cracked its uptrend with a head and shoulders upside shakeout. Look at the monthly. That's a topping pattern. The Amazon's damaged goods. So that to me, uh, day trading swimming against stream is fine, but that's damaged. Let's see. Vavros is asking about what's the use of Bitcoin money laundering. Uh, just Google it. I mean, that's a long discussion. It's blockchain. It's hiding money. It's current. The stories are all over the place. Uh, so I can't get into that now. All right, right now the midpoint. I don't know if we'd get filled, but Netflix is 88 cents. Let's do 5-minute high. Um, 5-minute high. It's I like this one. Five 35. Okay, so there's my shorthand. Yeah, Joe, 800 on that. And we had a long discussion because we had some people in here that totally thought that was asinine risk. And I'm like, really? How do you define asinine risk? And we went through it, probabilities, et cetera, et cetera. All right, so 5-minute high. I'm just waiting on this market. Actually, diamonds. We're still bearish here. We bounced off the low. For me to even stay day trade bullish, I think we kind of need 30-minute highs here. Mm, glancing at our opens. All right, Q's holding. It's bullish pre-market, little buy setup. After a big downside shakeout, that tail is real, but you're still swimming upstream. So these are just day trades only. All right, Netflix is 85. I still like this one the best. All right, let's do Netflix now. Wait, 535. Yeah, stop yesterday's low. All right, Netflix, 80 cents a share. AG, well, if it gapped under the stop, Harold, we use 30-minute low, but Yeah, I had been tightening the stop. We sold it. We sold a half yesterday, 30-minute low.